This is a demonstration of problem 144, formulating financial statements from raw data and calculating ratios. The problem gives us selected financial information from General Mills, Inc. for its fiscal year ended May 27, 2018, and then it's going to ask us to prepare the income statement, balance sheet, and statement of cash flows for General Mills, and then selected ratios. So the first thing we're going to do in Part A is to prepare the income statement for the year ended May 27, 2018. So the first thing on the income statement is the revenue. So we're going to copy that information that they gave us. And from revenue, we want to subtract our cost of goods sold. Now that will give us our gross profit. From gross profit, we are going to subtract our expenses that do not include cost of goods sold or income tax. So it's this amount here. And that's going to give us income before taxes. And from that, we're going to subtract the income tax expense. So we have now our net income for the year of $2,163 million. The next thing we're going to calculate is the balance sheet. So for the balance sheet, it's going to be very condensed. We have on our asset side, we have cash. So we're going to take our cash amount from the end of the year. And we also have non-cash assets. And we're going to add those. So our total assets are $30,624 million. Now we know based on our accounting equation that that should equal our liabilities and our stockholders' equity. So we're going to copy our liabilities at the end of the year and the stockholders' equity at the end of the year. And it does equal. So our total liabilities and stockholders' equity is also $30,624 million. Now we're going to prepare the statement of cash flows. So the first thing on the statement of cash flows is the cash from operating activities. So we're going to copy that. Next, we're going to add to that our cash from our investing activities. So investing activities was actually a negative amount. And we're also going to add our cash from our financing activities, which was positive. That gives us our net increase or decrease in cash, which was a decrease for this year. Normally we would add to that our cash from the beginning of the year, but we don't have the cash at the beginning of the year. They only gave us the cash at the end of the year. But we can calculate what the cash would be at the beginning of the year. Because we know that if the cash decreased and it was $399 million at the end of the year, then it had to have been the sum of those two, or $766.1 million at the beginning of the year. The next thing it asks us to do is to compute the return on assets. So remember that return on assets is equal to net income divided by average assets, which is beginning of the year assets, plus end of the year assets divided by 2. So our net income, which we calculated, was $2,163 million. Our beginning of the year assets are given to us in the problem as $21,812.6 million. And then our end of the year assets, we calculated ourselves, $30,624 million. So our return on assets is equal to our net income divided by our beginning of the year assets plus end of the year assets divided by 2. And the spreadsheet does that for us. And then that gives us our return on assets as 8.2%. Next, it asks us to compute the profit margin. So the profit margin is equal to the net income again that we already calculated divided by our revenue, which was given to us in the problem and we used in our income statement. So our net income divided by our revenue gives us our profit margin of 13.7%. The last thing it asks us to calculate is the asset turnover. So asset turnover is equal to revenue divided by the average assets. So beginning of the year assets plus end of the year assets divided by 2. So we know that our revenue, which we had already used to compute profit margin, was $15,740.4 million. And we had our beginning of the year assets that was given to us in the problem. We calculated the end of year assets, and our the spreadsheet is summing the two amounts for the assets divided by 2 and dividing that into the net income. So our asset turnover or productivity for General Mills was 0.60. And that is the conclusion of the demonstration for problem 144.